In this video, traders, we're going to look at when is it okay to move your limit if you don't get filled. Stay tuned. Hey guys, warm welcome to you. All right, so when is it okay to move that limit when you don't get filled? You know what? Comes down, market comes lower, doesn't quite catch your limit, poof, off it goes, and you're so tempted to chase it. And if you've kind of watched some of the videos on the channel before, I'll talk about, listen, don't chase it, be very careful, because that can result in disaster for your trades, especially if it becomes a habit. However, there are certain circumstances when it's okay to move your limit. Now, the broad area I look at is when the market has changed phase. So if we explain that, or if I try and explain that as in, if you imagine we're in a day trade scenario, in fact, let's draw it on anyway. We're in a day trading scenario. Okay, the market's been doing this, let's say, and you've missed your order here. Now for me, let's say now the market then starts to do this. Okay, the phase of the market has changed, and this could be a day trade, this could be a swing trade, doesn't really matter. You know when the market's perhaps rotating around a level, or it's been in a trend environment, or it starts, hammering to the downside, or just starts behaving different. It doesn't have to be distinct difference. This is quite a brutal difference of choppiness to trending to this. But you know yourself when you're trading a market, it kind of works, and it's almost, round a level. It's like working between two levels, or it's breaking above a level, or it's banging its head against a resistance level, or it's grinding up in a trend. That's a phase of the market, and when it changes its phase, that's when things, I believe, you can kind of look at things fresh. So if we look to this as an example, you've missed your limit, you had your order in here, you wanted to get filled on a double bottom, it didn't quite get it, and it starts to chug up. Now, normally you don't want to be kind of chasing stuff. However, now we're in fresh territory, and if we were to ignore this, grab the cloth, if we were to ignore this for a second, and we just look at this fresh territory here, then we could see, all right, the structure of the market has changed. And in actual fact, we probably don't want to be buying here because this has gone to fresh territory. It's broken through this high. We're probably looking, if we were looking at this, guys, we'll probably want this, but we'll probably want to buy here. We probably want to lob it out as it broke through those stops. So that'll be our exit. However, now we've done some more work up here. We've changed phase into more of a grinding, trending environment, whether that is a week later on a swing trading, whether that's in the middle of the day for day trading. The phase has changed. We can start to move the limit. We still may want to buy this thing. We may still believe it's bullish, and yes, it looks bullish if we just look to this, and we wouldn't probably want to buy it here, right? Because if it started coming down to here, that looks like a little bit of a fake out. It looks like it could open up fresh territory to the downside. So in some instances, when it does something else, we don't want to get our initial limit. We want to be either getting it higher or not at all. And so when we're in a secondary phase, when the type of market changes, when the levels it's working around changes, or the type and the conditions change, we can move our limit. So for this example, we might say, right, well, there's a 20 period moving average up here. I don't mind moving my limit just under that 20 period moving average, because that coincides, it's coincidence by the way, but that coincides with that high. And also, I think we've got plenty of room to move. We've got this, we've got that, and you can restructure the trade. And even though you're paying, what seems significantly more for it, and it would be on a swing trading basis, it might not be so much on a day trading basis. The trade is almost a different trade. So yes, you're moving a limit, and theoretically you're moving it up, but you're always creating a new trade idea from it. The thesis is still a bullish thesis. The market's going to push to highs, whatever it may be. But you're saying, okay, well, now we've changed the conditions and we've changed the area we're doing business. It makes no sense for me to leave the limit here because I don't want it if it's coming all the way back. I probably want to be selling it short as it broke through there. And even if it wasn't as extreme as that, guys, even if it was, a case of, let's just do another one quickly here. Even if it was a case of, we've been chopping around, we've missed our limit, and now it starts, doing this, for example, and our limit was, say, here, if we can see on the screen, we can. If our limit was, let's say, here, for whatever reason, we didn't get filled, again, we might say, well, looking at this now, do I want it? Well, actually, yeah, if we dip down to here, I don't mind buying it at this level. So you're moving up a very small amount. You're just changing it for the structure. And even though this is not as extreme as going from this conditions to these conditions, the nubbles and the levels that it's worked off it is different. You know, here from this kind of point onwards, we're working around, you know, this low level, this high level. We've got a bit of a structure like this, hadn't we? You could see that. And then when we're going to here, we've now changed environment a bit. The whole thing is shifted up. We're kind of working around a high. We've got a bit of a tighter level here. And we've kind of contracted things up, and it's a little bit askew. It's one of those kind of ranges. And so we work off that. And we said, well, if it kind of pokes below, I don't mind taking it, having a stop here and looking for highs. Or, you know, you would disregard the limit altogether. But the point of this is when it's okay to move your limit. And the summary, guys, is when the conditions change, i.e. the total conditions from a kind of range to a trend, or a trend to a range, or the numbers and levels it's constantly working around, then it's okay to say, right, I've missed it. The thesis is still valid. At one point I didn't mention, which I should do, is if it's already hit your targets for the day, for the week, for the quarter, whatever you're trading, then of course you won't want to chase it. But if you've still got a target up here, an ultimate target, an ultimate thesis, just the whole thing is shifted up, then you're okay to move the limit under these conditions. And of course, looking at it from a point of view of where's the risk, where's the reward, what's the probability of success here, and ensuring the last final check is you're ensuring you're not moving it out of revenge. You haven't thought, I've missed that, I definitely want to get in here, and you're not just doing it because of that. If you're looking at it objectively, then you're all good and you can move your limit. All right, guys, take care. See you next one. Bye-bye.